Hello dear students, welcome to Devika's Commerce and Management Academy. Marginal costing. We will see today 3 problems at a time in one episode. Okay, so please focus on today's class. By the way, did you check our playlist? Please check it out. There are many subjects already prepared, and don't forget to share these videos because with lot of care, energy and time I am preparing this video especially for student communities at the rate free of cost. Please do share, watch it, utilize it. Now coming to today's class, 3 problems we are going to work out at a time. Okay. So first problem is here, this one. 1, 2, 3, 5, 6, 7 problems. Okay. First one, calculate PV ratio at BEP, break even point. What is given to us? Sales 5 lakh, fixed expenses 1 lakh, profit 1,50,000. You know that PV ratio formula, S minus V by S into 100. S minus V, V means variable cost. We need variable cost. Variable cost is given, not given. We have to find out the variable cost. How do we find out? Always remember, when any item is missing, please remember marginal costing equation. S minus V is equal to F plus P. I told you on the very first day class, that is formulas class. In formulas class I told you anything is missing you can use S minus V is equal to F plus P. So we'll start working out this. So shall I start here, because 3 problems we have to do. Fifth problem, solution. 3 items are given, 1 is missing, so we'll use S minus V is equal to F plus P. S means sales, sales are 5 lakh. Variable cost we don't know. F is fixed cost 1 lakh plus profit 1,50,000. We'll take this right one to the left side, it comes to 2,50,000. Okay, let it be as it is. So this is 2,50,000. Five lakh minus variable cost 2,50,000, and variable cost is equal to 5 lakh minus 2,50,000. This is 2,50,000 is the variable cost. Are you getting it? 2,50,000 variable cost we got. Once if we get the variable cost, there is no problem at all to work out the problem. Now what we need? PV ratio. So PV ratio is equal to S minus V by S into 100. S is here 5 lakh. 5 lakh minus variable cost is just now we got it 2,50,000. S minus V by S means once again 5 lakh into 100. This is 2,50,000 by 5 lakh into 100. This is 50%. PV ratio is 50% you got. Okay. So this is over. Next, BEP. Break even point is equal to formula is fixed cost by PV ratio. Fixed cost is here 1 lakh divided by PV ratio 50%, 50 into 100. Two lakh. BEP is 2 lakh. This is over, 5th problem. Okay, up to here. 5th problem is over. Now 6th problem. Am I clear? We did not do anything. Simply as per the data we have seen what is required. S, V and fixed cost. These 3 are compulsory. Fixed cost, variable cost and sales. Here variable cost is not given. When any item is missing means we will use this formula, S minus B is equal to F plus P. So as per that formula you got variable cost 2,50,000, because rest of the items like sales, fixed cost, profit, these three are given. Easy to calculate. After calculation you got variable cost 2,50,000. Once if you get variable cost, simple PV ratio, you know, S minus V by S into 100. So you got 50%, then BEP, fixed cost by PV ratio. So you got 2 lakh rupees. So this is the fifth problem. Next we will go for the sixth problem. Sixth one solution. In this problem what is given? Given sales, profit and variable cost at the rate of 70% of the sales. 70% of the sales. Calculate PV ratio, fixed cost, sales volume to earn a profit of 40,000. Actually we need always fixed cost, selling price, variable cost. Sales, variable cost and variable cost and fixed cost is not given. Variable cost is 70% of the sales. Fixed cost we have to find out. First of all, we will write what is given to us. Sales is 1 lakh, okay. Next, variable cost. Variable cost is 70% of the sales. Sales are here 1 lakh. 70% means 70,000. 1 lakh into 70%. And profit, next what else is given? Profit is given. Profit is how much? 10,000. What is important for us? Fixed cost. Fixed cost is not given. Same formula we will use, S minus V is equal to F plus P to find out the fixed cost. S is 1 lakh. S minus V. V is 70,000 is equal to F plus P. Fixed cost we don't know, plus P. Profit is given 10,000. We will do this simplification. 1 lakh minus 70,000, 30,000. 30,000 is equal to F plus 10,000. Means we can take out this 10,000. F is equal to 30,000 minus 10,000. That is 20,000 is the fixed cost. When fixed cost is 20,000, it is very easy to calculate rest of the things what they are asking, PV ratio, okay. So PV ratio is equal to we know the formula S minus V by S into 100. S is here 1 lakh minus V. V is 70,000. This one. S minus V by S. S once again. S means 1 lakh into 100. 30,000 into 100 means one more 2 zeros by 1 lakh. It is 30%. Yeah, 30%. PV ratio is over. Next, what else? Fixed cost. Calculate fixed cost, already we found it. Okay. PV ratio you got now. Sales volume to earn a profit of 40,000. When we want to earn sales volume at a profit of something or want to know the profit at sales of something, we will use one formula, that is S is equal to fixed cost plus desired profit by PV ratio. Sales volume to earn a profit of 40,000. So this we wanted to find out. Fixed cost is, we know, 20,000. To earn a profit of 40,000. By PV ratio 30%. Here you can write sales volume. This is what they were asking, PV ratio. PV ratio is EBIT over. Next, fixed cost. Fixed cost is, you got it here, BBIT. Now this is CBIT, sales volume to earn. You have to write one line here, sales volume to earn a profit of 40,000. One line you'll write here and then calculations. Now if you see the calculations, 60,000 into 60,000, isn't it? Yes, 60,000 into 100 divided by 30, which is 2 lakh. Sales volume to earn a profit of 40,000. If we want to get a profit of 40,000, what should be the sales? The sales should be 20,000. Am I clear? As per this calculation. Take a screenshot or note down. I wanted to clear the board. Am I clear? These two problems are simple. Both the problems. Something is missing. What is that missing? Here variable cost is not given. We found variable cost as per this formula, and in this problem fixed cost is missing. With the same formula, S minus V is equal to F plus P, with the same formula fixed cost we got it. Then after that calculations are normal, just like previous problem. Okay. Now third problem, for that I will clean the board. The third problem, what they are asking, calculate PV ratio, BEP. Data is given, 3 are given, so easy to calculate. And BBIT they are saying the effect of 20% decrease in fixed cost. If the fixed cost is decreasing 20%, decrease in fixed cost, and 10% in variable cost. If fixed cost is decreasing by 20% and variable cost is decreasing by 10%, what would be the PV ratio and BEP? First of all, we have to calculate PV ratio and BEP as usual. In the second bit, if fixed cost and variable cost is decreasing, then 20% and 10%, if it is decreasing, then how do we calculate PV ratio and BEP? This is second bit. Both the bits we have to do. Okay. Now first bit is here. Let me say calculation of PV ratio. PV ratio is, you know, S minus V by S into 100. S is here 2 lakh minus V, variable cost is 1 lakh. S minus V by S means once again 2 lakh into 100. 2 lakh minus 1 lakh. 1 lakh plus into 100. We'll use the calculator. 1 lakh into 100 divided by 2 lakh. It is 50%. The PV ratio is 50%. Then BEP. Where is that? BEP. BEP is, you know, formula is fixed cost by PV ratio. Fixed cost is here. Fixed cost 60,000 by PV ratio. PV ratio is 50 into 100. 1,20,000. BEP is 1,20,000. This is simple calculation. I didn't write the formulas because we know, you know the formulas. I didn't write, but in exam you have to write it. Next, BBIT will take. BBIT is here. 20% decrease in fixed cost. Fixed cost is here 60,000. 60,000 minus 20%. Decrease they are saying. 10% is 6,000. 20% means 12,000. 12,000 means 58,800. Am I right? Once again we'll check it. 60,000 into 20%. 12,000 it is. Sorry, I have written 1200. It is 12,000 minus 60,000. It is 48,000. So here fixed cost is 48,000 and this is one bit. And next where it is 10% decrease in variable cost. Variable cost is here 1 lakh minus 10%. 10% comes to 10,000. So it is 90,000. When there is a decrease of fixed cost 20%, there is a decrease of variable cost 10%, then what would be the PV ratio and break even point? Means according to this we have to take. Now here fixed cost is 48,000, variable cost is 90,000. Sales are same as usual 2 lakh. Now we will calculate PV ratio. PV ratio is equal to S minus V. S is 2 lakh. S minus V. V is here 90,000. S minus V by S into 100. If we do the calculations, 20,000 minus 90,000 means 2 lakh minus 90,000 means 1,10,000. 1,10,000 into 100 divided by 2 lakh. 55% it is. 55%. Now what we need? BEP. So this is 55%. Break even point. Break even point is equal to fixed cost by PV ratio. Fixed cost is here 48,000. This one we have to take, not the original, because this is the B bit. Fixed cost is 48,000 divided by PV ratio. PV ratio is new PV ratio, this one. Okay, 55 into 100. 48,000 into 100. 48,000 into 100 divided by 55. It is 87,273. Is it clear? Once again I'll check. 48,000 divided by 55. Yes, 87,273. Yeah. So this is break-even point. Let me explain you once again entire the problem. First take a screenshot. In this problem, simple, what is given is here, data is given, need not to worry about the data. We need not to find out anything. First bit they are asking us to calculate PV ratio, BEP. We have done PV ratio, we got 50%. Okay, and BEP 1,20,000 we got it. Second bit, the effect of 20% decrease in fixed cost. Fixed cost decrease of 20%. Well, let us decrease it. This is 60,000, 50 lakh, or fixed cost is 60,000. If you deduct 20%, 12,000, you are getting your 48,000 as fixed cost. In the same way, 10% decrease in variable cost. 10% decrease in variable cost. Variable cost is here 1 lakh. 1 lakh minus 10%, it's coming to 90,000. As per this effect, we have to calculate the PV ratio and BEP. Whatever we want we can calculate, not only these two, data is ready. Okay. Now first what we have done, PV ratio, S minus V by S into 100, you got 55%. Then break even point, fixed cost is this one, by PV ratio, you got BEP this much. What is it is saying? What is the meaning of this problem? Generally the PV ratio is 50% you got, and break even point is 1,20,000. When you earn 1,20,000, when you sell 1,20,000 products, worth of products, then that will be the break even point. If at all we are decreasing the fixed cost and also decreasing the variable cost, if we decrease, then what would be the PV ratio? So that PV ratio is 55%, and break even point is coming to 87,273. There it was 1,20,000, now here it is 87,273. Means early, means 87,000 is less than 1,20,000. This is better, because if we decrease fixed price and variable cost, but less amount only, 87,273 only we are getting BEP. If we don't decrease it, 1,20,000. Meaning is this. Simply blindly we are not calculating anything. Are you getting it? In the next problem, we'll see a different concept, very important essay exam point of view. In exam essay point of view, you may get an important question that we'll discuss in the next class. Please stay connected, do refer this channel and share these videos. And don't forget to like and comment and how you are following it. So I need your feedback. So practice well and have a bright future. Good luck.